All right, a little Bitcoin analysis. Let's get rid of everything here. Let's figure out the trend. Let's make a Fibonacci level from the low at 30K and the high at 69K. All right. Here are the levels that seem to be accurate. You can see a bunch of reactions. Well, actually, those would not count. The ones that would count would be the ones on this end. So this is being respected, fairly respected, you know, in general. We can see that our Stackcoin 1 daily horizontal support is being very respected. So is our daily resistance up here. We got this trend line. This trend line is going to be the key to what we're going to do and what I'm looking for today. This seems to be a zone of high accumulation anyways, right underneath our daily support. Pretty much anywhere in this, I would imagine, would be a lot of buys. You can tell every time it dipped in here, it shot back up. If you're gonna look even on the hourly chart, you'll see the same thing, right? Hits here, boom, look at all these green candles, accumulation. Goes up here. Here, same thing. We got a little accumulation here. Got a lot here. I mean, this zone, when it dips in, seems to be the value zone at the bottom, so I wouldn't think it would break it, right? You have the fib level as well here. I think that's the 0.618, yeah. In addition to that, we have this trend line. I don't like this pattern. I've seen this many times. This downward, and then it goes up and wrecks all the liquidity in both these levels. This is pretty much a classic redistribution. We can check. It's basically this classic one. I see it all the time, right? You have, in fact, let's do something like this. Put here, we'll put this in, right? This AR here, the selling climax technically would be here, but you can say somewhere around here because of this. It's just a hypodermic needle slash down. You can in fact use this level as the daily support from Stackcoin 1. And then sign of weakness, which would be this right here. Then we got a yeah, actually it'll be around this one here, but you got a secondary test. Another sign of weakness. You have the UTAD up here. So what I do expect is, you know, it looks like a collapse, like it would collapse and go down. I know this doesn't look like right to you when you look at this, but I've got a feeling for these things. I've seen them many times before, and this looks like those beginning areas right here. So I don't know. I don't know what's going to happen, but I would imagine if it does break, I mean, you know, the way it goes is I would not be surprised if it goes down to here. Really scary. I mean, there's not much support there. I hope technically this would be the area of support after you break that 40 level down here, right? You break down this level, there's really nothing underneath there. So that would be scary. I would wait. This looks like there's a lot of congruence of this. You can probably create even a little diagonal, probably something like this as well. Right, this would be a pretty strong support. Right? It's kind of a rough one these days. You just don't know. I would, to be safe, I would set a little limit order here and then place a little stop about 43,300 and then place a buy at 44,300. You know, low leverage. I mean, 2%. That's a rough one. Maybe you can, if you see it tumbling down here, right, and it gets into this zone, right? Well, here I would consider the buying zone. And it's wedged between the 0.618 and then this upper resistance line on stack coin 1 indicate proprietary for now. We'll release it in a bit. So I would, if you watch it, wait until it gets maybe halfway, because if this is going to hold, it probably will break and then hold a couple of tests, and then if the reversal were to come there. So again, I would do it that way, right? I'd wait for it to break in here, and then I would mark it buy. Place a stop loss down here. That's how I would play it.